NVIDIA stock may seem like it's on the verge of a correction, but there's a path to even higher prices. Most of the latest news with NVIDIA stock has been of the negative variety. Shares have encountered weakness lately, and there are concerns this will continue to be the case in the near term. However, not only is it questionable that NVIDIA stock will experience a continued correction, a path to even higher prices remains. Let's dive in. NVIDIA stock. While others worry, back up the truck. Welcome to Timely Investment Research. For much of 2023, NVIDIA stock news was positive, but more recently, much of it has been of the negative variety. The market's enthusiasm for AI stocks continues to cool. High interest rates are making investors hesitant about tech stocks, which, based on traditional valuation metrics, appear pricey in a world of 5% interest rates. To top things off, NVIDIA appears vulnerable as tense relations between the US and China affect its business. As these factors drive fear, uncertainty, and doubt about the stock, it's not surprising many believe a continued correction is in store for shares. However, it's not set in stone, as I'll explain here. NVIDIA stock, no need to panic. Concerns about NVIDIA may be rising amongst the investing public, but much suggests that the market is overreacting to this news. Yes, there are concerns about growth deceleration in the coming fiscal year, ending January 2025, after the jaw-dropping levels of growth during this fiscal year. As the valuation of NVIDIA stock, forward earnings multiple in the high 30s, is based on the expectation of high future growth, I can understand why this is a concern. Yet, while growth is likely to slow down, it's not screeching to a halt. Sell-side forecasts call for NVIDIA's revenue to grow by 46.8% during fiscal year 2025. Not too shabby. Earnings are expected next fiscal year to rise by an even greater amount, 52.8%. This high level of projected earnings growth calls into question the argument shares have become too pricey. Sure, projections are always subject to change. One recent negative development: the U.S. curb on AI chip sales to China may have a $5 billion impact on sales. Still, overall AI chip sales are running in the tens of billions and still climbing. Demand from other end users will likely help to mitigate the impact of this geopolitical headwind. A path to $1,000 per share. With AI chip demand still increasing, and as demand trends among the company's non-AI end-user markets improve, NVIDIA appears well-positioned to beat expectations with its subsequent earnings releases. Even if interest rates stay high in the coming 12 months, continuing to place pressure on the market, a high level of earnings growth could help NVIDIA stock bounce back. Re-hitting past price levels north of $500 per share is well within reach. However, it's not as if the only play with NVIDIA is to buy now at around $410 per share and flip it once it re-hits $500 per share. Over the next few years, this stock may just well soar to prices nearing or even topping $1,000 per share. As I recently argued, NVIDIA is the dominant name in AI chips, and that's not going away. Even as competitors play catch-up, NVIDIA's market share, estimated to be in the 70%–80% range, may not decrease by much. With the AI chip market set to keep climbing at a rapid clip, don't discount NVIDIA's chances of hitting the level of earnings needed to send this stock up to $1,000 per share, around 144% above today's price levels. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.